How many times have you looked at a chart after the fact and then told yourself, man, that just makes total sense, and you see it move perfectly, set up a pattern, and then just move effortlessly and to the T textbook. You're like, man, that is a beautiful chart. By doing this and practicing this, you're going to get better. You're going to get used to how these stocks like to move, and you're burning it into your head and how these stocks like to move up and down. And if you pay attention to the small details, you'd be amazed much of the details a lot of people overlook. Good example here, Uber, and we're in earnings season. We're going to take a look here at Uber on May 4th. Just before the market opened, Uber came out and they put earnings out. When they put earnings out right here, the stock tanked from $27.50 all the way down to just above $26. I tell you guys to focus on the general area, the psychological whole dollar level, $26. And I also say, give it time. The stock will prove to you when it's ready. Just let it set up. It just takes time. We sink down here to 26, got a good morning bounce. Usually the first 30 minutes of the trading day is when you're going to see the most volatility. So after a sink like that and a good run up, it's typical to see within the first 30 minutes volatility like that. And that is a good bounce from 26 back up here to 27. That's a $1 bounce right there. And it bounced and topped out at 9:52. So within 22 minutes of the trading day open, you could have been done right there. Back to this, we go right back down to that 26, and you could see there's all kinds of triangles that just happen and make out. You'll notice your eyes will naturally pick up on these triangles, and a lot of them. We set up a triangle in a wedge right at that 26. So we put earnings out. That's going to attract volume. We bottomed out here multiple times at that 26, and we wedged out. There's a few wedges on this. There's like a wedge within a wedge right at 26. And we've been taught for pattern breakouts, when you spot a pattern, wait for confirmation. Wait for that stock to either break to the upside or break to the downside. The way I look at it, I don't care what pattern it is. It could be a bullish continuation pattern, a bearish continuation pattern, or just a pattern in general. I look at all patterns, chart patterns, the same. They're 50-50. You do not know which way they are gonna go. You don't. That's why it's best to wait. Wait for confirmation. Let that pattern break, choose its direction, and a lot of times you'll see that stock come back and test where it broke out from, and then hold and continue to rise or fall down. In this case, we got a triangle and a descending wedge setting up here. We break out of that pattern right here. Right here is where we break out from. We pop up, we quickly stall and fall out right back down to 26, and then we quickly reclaim, and now it's a steady grind right up from that all the way back up just underneath of its high here from this morning's spike, up just under 27, and we'll draw a line out right at that 27. So just under 27, we got a nice consolidation here setting up. And also take in mind, anytime you have a move, so let's go back on this a little bit. This move right here, starting from here at 26 all the way up to just 27 right there, right, you guys? Typically, how much would you want to see a stock pull back? At around 50%, at least 50%. That's on average what most investors are taught when stocks make a move up or down, to have it retrace 50% and then continue to do its thing. So from this measured move here, it pulls back almost 50%. Is about half of this move is what you're measuring. That's what you'd be looking for it to hold up, consolidate, gear up to break up over that 27 and then continue to push on. We break up over 27. We run all the way up to 27.50 up here, which is this morning's high from this wick in earnings. Then we retrace all the way back down to 27 again. And VWAP as well. Most people have VWAPs on their charts. We pull back to VWAP 27. 27's the next key level. And you can easily draw on a trend line connecting the lower highs. We break up out of that trend. Nice little pullback here. We're holding out of that trend breakout. And then we continue to push up, retesting highs up there at 27.50s. Pull back again. This time pulling back 27.10 and even 27. So we keep pulling back to that whole dollar with Uber here and VWAP. And we're approaching end of day too. So power hours from 3 to 4 military time here. So that'd be 1500 is when power hour would start. So right here is where power hour would start. And from 26 again, though, we run back up to the highs up here, just under 28. And we continue to push all the way up to 28.50s. But by going back and looking at this and paying attention to the little details, putting it together, making sense of it, you're getting familiar with how these stocks like to move up through levels at significant price levels, how patterns like to break out. And going back to when we first started this video lesson here, when you go back and look at these charts, how many times have you told yourself, like, it makes perfect sense, it's a beautiful chart in the way that this set up and move, but it's a totally different story when it's happening real time. That's why you got to break down these charts and get familiar with them, burn it into your head, how these stocks like to move. And this is why I like to say, take it one level at a time and just don't focus on one specific time frame. Like we were just doing in this lesson, I was giving you guys all of my examples on a 1 minute. Also correlate it with your 3 minute, your 10 minute, or whatever time frame it is that you use. And by repetition doing this, breaking down charts, putting it together, how did it move from here to here? Practice, you'll get better, you'll get faster, and you really will start to pick up on this, and it will get easier with time. It will. Remember, everybody's taught to look out for these triangles that set up. It's just because our eyes naturally pick up on them. That's the only reason that they're relevant. You could spot triangles and patterns all the time. It's because everybody's looking out for them. Everybody. Just a quick little random little lesson breaking down Uber. We were pulling this up and talking about it when we were breaking down the bear market playbook. You want to focus on well-known companies that have consistent volume every day and trading just the basic range, the chart itself. Stop trying to focus on the top percentage gainers in a bear market or a correction, because majority of them are just going to fail and fade out. They're going to get overcrowded with volume, be hard to trade. Like this morning with BTTX, it was one of the #1 stocks gapping up this morning. It had one quick pop this morning. Besides that, though, it's been a tug of war just back and forth with the bears and the bulls, and it's currently still in limbo. You don't know what's going to happen with it, how it's going to play out. Volume on the day, market's only been open for 2 hours, and this stock is already at 40 million in volume on the day.